Selling land in the UK. I mean, it can be an amazing payday, right? But what a lot of people don't realize is just how much of that profit can vanish, poof, gone, in taxes. So today we're going to walk through some key strategies to help you legally cut down or, hey, maybe even wipe out your capital gains tax bill altogether. Now, this whole discussion has been put together with the experts at ProTax Accountant, and trust me, these folks live and breathe this stuff, so you know the info you're getting is absolutely top-notch.
All right, so let's just dive right in with the big one. You're thinking about selling some land, but have you really thought about the tax bill that comes with it? Because, not planning for this can turn what looks like a great profit into a massive headache.
Okay, first things first, let's make sure we're all on the same page. What even is capital gains tax, or CGT? It's not a tax on the total sale price. That's a common mistake. It's a tax on the profit, the gain you made. So let's say you bought land for 50 grand and sold it for 250 grand. You don't pay tax on the full 250K. You pay it on the 200,000 pound profit. That is the single most important thing to get right. And this right here is why you have to plan ahead. For the current tax year, 2024 to 25, your tax-free allowance is only 3,000 pounds, just 3 grand. It's been cut down massively in recent years, which means a much bigger chunk of your profit is now fair game for the taxman.
So what about the profit that's over and above that £3,000 allowance? Well, if you're a basic rate taxpayer, you're looking at a 10% tax. But, and this is a big but, if that gain is large enough to push you into the higher rate tax bracket, that rate literally doubles to 20%. That is a huge difference to your bottom line.
Okay, so how do we deal with this? Let's get into the good stuff. We'll start with the foundational strategies. These are the tactics that pretty much any landowner can use to start cutting that tax bill right away.
Here's a classic, and it's a classic for a reason. Some people call it bed and spouse. The idea is simple. Any transfers between you and your spouse or civil partner are completely exempt from capital gains tax. So, what you do is gift a share of the land to your partner before you sell. Why? Because you can then combine both of your individual 3,000 pound allowances. Just like that, the first 6,000 pounds of your gain is totally tax-free. Pretty smart, right?
This next one is a really clever way to turn a negative into a positive. Have you sold any other assets at a loss recently? Maybe some stocks or shares that didn't quite pan out? Well, you can actually use those losses to shrink or even completely wipe out the taxable gain from your land sale. And the best part? Any losses you don't use can be carried forward forever to offset gains you make in the future.
Now this one is a potential game changer. It's called private residence relief, and it could mean you pay absolutely zero CGT. The deal is, if the land you're selling is actually part of your main home's garden or grounds, and the whole plot is less than 5,000 square meters, which is, about 1¼ acres, the sale could be 100% tax-free. A huge one to look into.
All right, let's switch gears a bit. We're going to move into some of the more specialized reliefs now. These are really aimed at people who've been using their land as part of a business, or maybe for the more savvy investors out there.
A really powerful tool in this area is something called Business Asset Disposal Relief, or BAD for short. If your sale qualifies, this can slash your CGT rate in half. We're talking from a potential 20% all the way down to a flat 10%. I mean, on a big gain, the amount of money that saves you is just massive. So who gets to claim this? Well, a couple of key things. The land has to have been actively used in your business. Think farming or land with commercial buildings on it. You also have to have owned both the business and the land for at least 2 years leading up to the sale. And there's a pretty generous £1 million lifetime limit on the gains you can claim this for. Here's another more advanced strategy. Instead of taking the profit and paying tax, you roll it over. You can reinvest the money from your land sale into certain tax-efficient schemes, like the Enterprise Investment Scheme, or EIS. When you do this, you can actually put off paying the tax, sometimes for a very long time. It's a fantastic way to keep your money working for you without taking that immediate tax hit.
So we've talked a lot about what to do, but the when and the how are just as important. Seriously, getting the timing and the paperwork spot on is absolutely non-negotiable when it comes to good tax planning.
Check this out. It's a simple timing trick, but it's so effective. The UK tax year ends on April 5th, right? So if it's possible, think about splitting your land sale across 2 tax years. You could sell one bit in late March and the rest in early April. By doing that, you get to use your 3,000 pound annual allowance not once, but twice. That's another 6,000 pounds of profit shielded from tax.
Okay, I need you to remember this number. It is the one deadline you absolutely, positively cannot afford to miss. For most land sales here in the UK, you have just 60 days. That's 60 days from the completion date to report the sale to HMRC and pay any tax you owe. If you miss that deadline, you're looking at penalties. Simple as that.
So there you have it. We've gone through a bunch of really useful strategies, but you know what? The most important part of all of this is actually turning this knowledge into a real plan of action that works for your specific situation.
And let's be super clear about what's at stake. Getting this stuff wrong isn't just about paying more tax than you need to. It could mean you completely miss out on reliefs you were actually entitled to. Or even worse, you could end up with penalties from HMRC for mistakes or late filing. It's a triple whammy you want to avoid.
Which, brings us right back to where we started. Looking at all these different strategies and all these rules, have you really sat down and planned for the tax side of your sale? Are you 100% confident you're not just leaving money on the table for the tax man to pick up?
Look, every single land sale is different. It has its own unique history, its own set of circumstances. And while all these strategies we've talked about are powerful, knowing which ones to use and how to apply them correctly, well, that really calls for tailored advice. This is where getting professional guidance is just invaluable.
And for that kind of expert, personalized advice, you should really get in touch with the team at ProTax Accountant. They can take a deep look at your specific sale, your situation, and build a solid strategy to minimize your tax bill, all done legally and effectively. Their contact details are right there on the screen. Give them a call. Thanks so much for joining me.